Hello and good day to everyone. I hope you have a profitable trading week ahead. I am Dibmehr, and I am excited to present my very first analytical video. In this session, we will analyze the past week's market performance using my proprietary trading tool, starting from the market data of 2 weeks ago. Please note that this analysis is advanced. If you are a beginner in financial markets, it is essential to understand price action fundamentals before applying these concepts. Disclaimer. This analysis is not financial advice or a signal to buy or sell. It is strictly a market backtest for educational purposes. In this video, we will be analyzing the price of copper, specifically examining support zones, price interactions, and reactions. Using the bar replay feature in TradingView, we will hide the most recent trading week. We will start with the candle from 2 weeks ago and analyze the price action fluctuations in real-time simulation to identify potential support and resistance levels. We measure the range from the last confirmed swing high, marked by a valid breakout, down to the origin of the move using my proprietary tool. This allows us to identify specific price support levels. Here, I have utilized the most recent support level, which marks the origin of a sharp bullish impulsive move. Furthermore, I incorporate the Ichimoku Cloud to identify potential dynamic support zones for expected fluctuations, which can be highly effective for placing stop-loss orders. I also measure the internal retracement levels of the upward trend to serve as additional confirmation for support. This support zone is a prime area to look for a buy trigger using your preferred tools, indicators, or trading systems. Specifically, we are looking at the price level of 5.2158 for copper. The origin of this sharp move in copper is significant, as it offers a crucial reference point for establishing a long-term market bias. In the FiboTesla trading system, price gaps within the Fibonacci channels can create a magnetic pull on price. Consequently, if the price reaches this zone, it is prudent to wait for the market to stabilize before taking action. I am marking these support levels now, so we can monitor them closely during the upcoming trading week. Please pay special attention to the support lines provided by the Ichimoku Cloud. I believe this bullish trend slope should be analyzed to determine the correct angle, allowing us to measure potential support lines within this channel's trajectory. I will apply my tool from the swing low of this move up to its pivot high to pinpoint the target support zone. Now let's look at the Ichimoku support zone in this time frame. Notice that it aligns perfectly with the 50% retracement level of the sharp bullish move. I'll mark this level on the chart. I am identifying the price range between the gap and the origin of the move as the ultimate buy zone. This zone remains valid and significant for the next 2 to 3 weeks. Stop hunting refers to zones where price wicks often penetrate during sharp bearish moves. These areas present excellent opportunities to catch strong trend-following entries. All right, Let's hit play and watch how price reacts to our analysis. Let's assume we are trading live. We observe price action behavior on this trend line. Here, on a lower time frame, we spot a head and shoulders pattern forming, while the Ichimoku Cloud support is also present in this area. The best approach here is patience, followed by measuring the exact angle using the proprietary FiboTesla tool. In this movement, the price penetrates our level. We precisely measure the 50% retracement of the bullish move. Since we have a valid zone for a buy trigger, we can look for long positions. In such scenarios, flat levels of the Ichimoku Cloud can serve as potential targets. Now we have a confirmed buy zone for short-term and mid-term trades, with a clearly defined stop loss. These levels remain valid until the end of the week. You can use Ichimoku signals within these zones to activate short-term trades, signals that are typically shared in our company's VIP group. In price action, when a sharp move is followed by a consolidation or range, it is advisable to use a trailing stop. This ensures your profits aren't eroded by market volatility. At this point, our trailing stop has been hit. Now is the best time to look for price action confirmation to continue with the uptrend. However, predicting these moves before they happen is challenging and often correlates with fundamental data. An Ichimoku cross can serve as an entry point for scalp trades in the direction of the trend. The stop loss for these types of trades should be placed below the recent swing low on a lower time frame. Thank you very much for joining me in this educational analysis video. Please make sure to subscribe to my YouTube channel so you have access to my future videos as soon as they are released. Good luck and happy trading.